Welcome to Under One Roof MTL, where we demystify home ownership 1 week at a time. Happy Thanksgiving, everybody. I hope you're having a wonderful long weekend and spending some time with your family. Joined as always by Fred Pichette and Martin Spalding of Fred and Martin Mortgages. Martin, do you have anything planned for Thanksgiving Sunday?
We had a major feast last night with all the fixings. The whole family, the whole clan was over. Turkey, cranberry stuffing, green beans, mashed potatoes, the whole enchilada.
Amazing. Fred, are you doing anything fun with the family?
Always with the family on Thanksgiving. Like going to visit my mother and having a great brunch.
Ah, delicious, delicious. Yeah, I was at my grandma's yesterday. Beef Wellington was on the
Oh, very nice.
just fancy. And at my sister's later today. So lots of fun. I hope that you listening are having a wonderful holiday as well. You know what would make Thanksgiving better? Cookies from Felix and Norton. So we're going to give you a chance to win some right now with our trivia question of the week. If you think you know it, 514-790-0800. Do include your name as well so we can give you a shout out at the end of the show. And the winner will receive cookies from Felix and Norton delivered straight to their door. Our question for this week: in Quebec, what is a condominium reserve fund study? Condominium reserve fund study.
Would that be the Fonds de Prévoyance in French?
I believe so. That would be the Fonds de Prévoyance en français. If you think you know what it is, 514-790-0800, and we will get to the correct answer a little bit later in the show. Guys, also later in the show, we're going to be joined by a Montreal notary to chat about that crazy story about the Ontario couple that passed away, and their kids were sort of stunned to know that the estate owed 6 figures worth of money to the Canadian Revenue Agency. So how did this happen? How can we avoid having this happen? How can you communicate better? We're going to talk about that with her in a little bit. But there's lots of stuff in the news this week. So Equifax put out a story that mortgage fraud is down, which sounds like good news. But Martin, apparently falsified documents is a major issue right now.
So this article caught my eye because Fred and I have never experienced this. So we've never been submitted falsified documents by any of our clients. However, we know that this transpires across Canada. And to falsify a document today, especially with the advent of AI, is very easy to do. And so what is going on is there's a lot of financial misrepresentation. So things like false employment letters, altered pay stubs, falsified bank statements, and even falsified tax statements. So like I mentioned, we've never experienced this, but I would like to put a but. And the but I'd like to put in this is that sometimes our clients are not as accurate and forthcoming with the information that we need to send their file to a lender. And let me clarify that. We had a client. The file looked like it was bulletproof. We did our due diligence. They made an offer, got an accepted offer. And when we pulled their credit report, they had done a consumer proposal within the last year. And that piece of information should have been discussed with us prior to starting all the steps that we take to pre-qualify somebody, because that would have either changed our strategy or we would have simply told a client, you'll need to wait. You'll need to wait it out. You'll need to rectify your debts. You'll need to rebuild your credit. But the client never told us. So we assumed that everything that he had put in the application, that the documents were great. But when we pulled out his credit report, we saw this and it really blew up the deal. And so often you'll hear Fred and I say, we like to pre-qualify people with documentation. And that documentation, so the steps that we take, because if you fill out an application online, that information has not been vetted. So that application is for nothing. So the way we do it is we have you fill out our application. It takes about 10 minutes. Then you send in your documents, which come and support the information that you put in the application. Then we pull out your credit report, because sometimes people just forget. They'll go, well, I've got 2 credit cards. And when you pull out the credit report, there are 4. So those all all have an impact on our ability to qualify you for a mortgage. And then we submit it to the lender. And when the lender starts to do their due diligence, just because we feel that your letter of employment, your pay stub, and your T4 are all legit, well, if there are any discrepancy between those three, they'll catch it. And what a lot of people don't realize is that letter of employment, they ask to have it signed by your direct report because the lender will actually call your employer to validate the information found in the letter of employment. And if there's a discrepancy between your pay stub and your letter of employment, they're also going to challenge it. If there's a discrepancy between your letter of employment, your pay stub, and your T4, they're going to challenge it. So trying to game the system is a no-win situation. And so again, with AI, very easy to do, but as much as you're using AI, the lenders are also using AI, and sooner or later, it's going to catch up with you.
Yeah, it's like using AI to write your university essay for you. These universities have these tools where they feed essays into them and it detects what percentage of this was generated by AI.
Well, you
So,
know what? I heard a crazy story. People who are job hunting will take the competencies and the qualifications that people are looking for in the person they're going to hire, and they mirror their CV to be completely in line with the qualifications required for that job. So all of a sudden, your CV will pop because obviously they're using an algorithm to filter through all the CVs, and then boom, you're the perfect candidate. But when you sit down in front of the person and say, "Hey, by the way, I hear you've got an MBA." Yeah, well, I don't really. I said MBA, but I didn't really finish my MBA. Sooner or later, you're gonna get caught.
yeah, I know a lot of people will like copy those keywords and like paste them into their CV and just
Exactly, it's just
color white.
craziness.
Yeah, no, it's wild.
It's never a good strategy to lie anyway,
Yeah,
like tell the truth up front and it's gonna make things much easier.
because you often hear me quote my father. So my father said, "Martin, if you tell the truth, you don't need to remember it."
Mm.
Right? But if you start to tell a series of lies, those lies are going to catch up to you. So
We keep
when it
your
comes to
stories.
us, send us, you can tell us anything. Because what Fred will do is before he submits a file, he'll actually put lender's notes in. So he'll tell his story. So he'll tell your story. So to basically to set the stage for the underwriter, so the underwriter understands your situation, and then they'll analyze the information you put in your application, supported by the documentation. So the more forthcoming and accurate you can be with us, the better chances you have of getting the mortgage you're looking for.
Now, speaking of mortgages, before we go to traffic, I want to get to this story as well. A lot of Canadians are falling behind on their mortgage payments. Um, and this usually is a scary sign because usually, from what I understand, mortgage payments are the last things that people will fall behind on. They would rather be late on a credit card payment or a utility payment before their mortgage. So if people are falling behind on their mortgage payments, that usually means they're pretty far behind on some other things as well. Now, Fred, I know your message is probably don't wait. Come see us and see if we can refinance and pull you out of this hole.
Well, if you're in debt, absolutely. And if you miss mortgage payment or you're about to miss a mortgage payment, try not to first. And second, it could be a good thing to give us a call because that's mean you're in bad situation. Um, Obviously, right now the big issue is renewal. You know, all people knows that 5 years ago people got COVID rates, which is below 2%. It was great. People made a lot of saving in terms of interest, but now they're gonna face a 2.5% interest rate higher than what they signed 5 years ago, which is it's very important right now to look at different option and see if just a simply renewal is for you or refinancing will be a better option too. And also budgeting because from less than 2%, 1.599 interest rate to let's say around 4%, it's a huge difference if you carry a high mortgage of over 500,000, which is it's important to look at your option and to make sure that you're not going to default on your mortgage in the future.
Absolutely. If you want to know more about what your options are, you feel like you're in a bit of a sticky situation, get in touch with Fred and Martin. You can do so by going to their website at fredandmartin.com. Coming up after we check traffic, did you hear that story about the woman whose parents passed away and she found out that their estate owed over $600,000 to the CRA? We're going to find out why this happened and how you can avoid something similar when a notary joins us. But the time is 12:15, so we're going to check in at the CJD 800 Traffic Center. This is Under One Roof MTL on CJD 800. I'm Robyn. That's Fred. That is Martin. Guys, did you hear this crazy story? I have been hearing nothing about this on TikTok for the last 2 weeks. So, an Ontario woman's parents passed away, and she found out she had a tax bill of over $600,000 to pay. Now, the situation is a little bit complicated. There's a lot of factors at play: capital gains, RRSPs, property. So we figured it would be best to bring in a notary to make sense of some of this and to find out how you can avoid finding yourself in a similar situation. Anna Kamateros is a Montreal notary, and she joins us now. Hi, Anna. Thanks for being here.
Hi, nice to be here. Thanks for having me.
So I'm sure you heard this story, of course. What was your reaction? Because obviously when you see a headline like somebody owes the CRA $660,000, your instinct is, oh my God, how did this happen?
Yeah, so I just wanted to clarify because it's not actually the daughter who has to pay the CRA. It's the deceased who's like, there's by fiction of the law, like she is deemed to have disposed of her property the day that she passed, the day before she passed away, right? So, and there's a deferral whenever it's a spouse. So there wasn't that story saying like, when her husband had passed away, rolled over into her RRSP. I mean, and there's all these technical tax issues there, right? But once we get away from the whole spouses inheriting from one another, and like it mentioned also aptly in the article, if we're passing away at a young age and our children are inheriting what is mainly in an RRSP or a RIF, it's heavily taxed. So it's just a matter of, we can't get away from taxation. I think that's that's something that's well known. But I think everyone needs to know what the potential impact is. So that's where I think, the surprise of it all, it's shocking, right? The amount. The surprise of it all is what's difficult for a family who, like the article said too, is also grieving from the loss of their parents, right? So that's something what I would say is the main thing that your listeners should take away from today is discuss everything with your notary, legal advisor, planner. I mean, we often work interdisciplinary here. It's important because, sometimes also there was mention of a cottage, right? And the cottage throughout a certain amount of years was not their principal residence. So that was taxed for the amount of years it wasn't declared as their principal residence. Some parents say, you know what, I'm going to just transfer it to my children from now, deal with the taxation issue now as we're still alive. And also, the children could take over by financing the property. There's different options that are available. It's just, do you know all the scenarios that are available? So there's some insurance was also mentioned, which is a very good planning tool to minimize capital gains when we pass away. So again, if we know what the potential impact is, there's tools out there to minimize, and it's all part of the planning process, I think.
So, Anna, what I'm hearing is, I'm starting to have these conversations because as you get older, you turn to your colleagues, you say, hey, do you have a will? Do I need a will? Is a will an important thing? And God forbid I pass away and I don't have a will. What happens in Quebec to my estate?
So in Quebec, if we don't have a will when we pass away, then the law presumes what we would have wanted to happen in the event we pass away. So we have different orders of heirs. So we have, firstly, if we're married and have children, then 2/3 go to the surviving children, 1/3 to the surviving spouse. I think everyone knows a bit, it was highly mediatized. There was a new law that came into effect for common law spouses. But those succession rules, so a common law spouse can only inherit from an estate of someone who doesn't have a will if they had a common child together after June 30th, 2025. So, while it's highly mediatized, it's important to know what the different rules are there. So it presumes for us. if we have no spouse and no children, then we go into the second order of heirs, which would include 50% to parents, 50% to siblings, with the siblings' children being able to come and inherit in their place. So it's sort of following the family tree from the closest degree to the furthest, depending on who's around.
I've got a handwritten will. Is that good enough, or do I need to have a notarized will?
So it's valid. Under our Quebec, our civil code recognizes holographic, so handwritten wills. They also recognize wills done before two witnesses, and then the final format of wills are notarial wills. And the main benefit of having a notarial will, a will done before a notary, it's an authentic deed. It's never lost. It's registered. Notaries have ethical obligations to ensure that the person understands what they're signing in front of them. And so it's harder to challenge, in the event someone passes away. And, most of the time people come to consult to do their wills because they want to avoid any problems in the future. They don't want, their estate to be squandered in legal fees and the like. So there's that. But the other two formats of wills are valid under a Quebec law, but they're subject to what we call probate, which is different from probate in the rest of Canada. It's probate meaning that the will can come into effect because it meets the formalities under the civil code to be one of the validly recognized wills. And this is becoming a bit of like an interesting topic in the case law, because there was recently, an email will during COVID, during the big lockdown. It went all the way to the Court of Appeals. I think it's actually, so the email will was not recognized because it didn't meet the threshold of it being signed. The signature is still a big one. It wasn't even DocuSigned or anything along those lines. So it's an interesting topic of conversation. It could lead to potential problems too. If we have a holographic will, and we have an older notarial will, well, you're going to have to prove that this holographic will is the actual intention of the person who signed it. So it's just a matter of, what is appropriate depending on the circumstances.
At what stage of life should people start thinking about making a will, having a will?
It's never too early. I would say if you own property, if you have property and you want to make sure that it's going to go according to your plan. I mean, it doesn't mean you're going to die tomorrow, right? That's usually the worry, is that if I'm doing this, you're thinking I'm going to die, right? But no, it's just a matter of planning in the event of, we all are eventually going to end up there anyways. But, if you have minor children and they stand to inherit, there's a lot of oversight by the public curator. It's been very difficult. We've dealt with a lot of, surviving parents whose children have inherited 2/3 of the estate, which includes, being undivided co-owner with the surviving parent. And so it's just a matter of planning accordingly. Big life situations.
Should you have a go-to file?
It's a good practice to have, and you have like a running sheet with, your financial investments, your advisors, contact persons, and the like. And you could also, you have that secure folder and let your closest family members know, even funeral prearrangements if you've made them, so that all that can be retrievable and dealt with in the event you pass away, because you want to take away the guesswork, right? Especially if you have close loved ones you want to take care of. And there's a really good book, it was by a Montrealer, it said Leave Them Lists. And she actually has like practical, like it was a really great book. I can't remember the author's name, but I would strongly recommend it for anyone looking to do that. It's really great.
So basically the advice here is be prepared, plan ahead as much as possible. Anna Kamateros of Montreal Notary, thank you so much for your time. This has been really helpful. This is Under One Roof. I'm Robyn. That's Fred. That is Martin. We like to take your questions. So if at any point you have a question for the guys, text us 514-790-0800. We'll do our best to include it in the show. One person texted in, my mortgage is up for renewal next spring. Should I renew early to lock in a lower rate, or should I wait to see if rates drop further? Oof, that's a tricky one, because we're expecting maybe one more rate drop this year from the Bank of Canada. We don't really know what 2026 is going to hold. What would you advise your clients to do in this situation?
Let's say you're going to hate my answer. It depends. And why does it depend? Well, it depends on your lender, the conditions attached to your current mortgage, your current interest rate, and perhaps your comfort with risk. Renewing early gives you security because you know what you're getting into, but waiting could mean more savings. So it's a balancing act. Are you risk adverse, or can you tolerate a little bit of risk? So I drafted some really quick pros and cons. If you renew early, pros, rate security, you know exactly what you're getting, gives you peace of mind, and gives you a certain amount of protection, whether rates go up, but it obviously hurts you if rates go down. So the cons, you might miss out on rates going down. And also you got to look at the penalties if you decide to break your mortgage. So that's if you renew early. If you wait, so pros, potential savings, flexibility because you can shop around, you can negotiate, clarity. We're talking a lot about the economy. We saw that Carney was with Trump this week. There was some tariff talk. Nothing was resolved. And now we're also seeing perhaps some peace in the Middle East. See, these are all factors that are going to play into our economy. So that'll become clearer and clearer if you wait a little bit.
I know you guys also wanted to talk about first-time buyers because I think what we think of when we think of a first-time home buyer has sort of shifted. Probably 25, 30 years ago, you think of a first-time home buyer and you think of a young couple, 22, wanting to start a family, buying their first home. That's what the vision was. But first-time buyers aren't usually very young anymore. People are needing to, maybe finish university, work for a few years, save up for that down payment. And I'm sure there's a lot of other different factors that play here. So let's walk through, what the new first-time home buyer looks like. What are some of the new ways that people are getting into the real estate market?
And let me also underline, it's not necessarily a couple anymore, right?
True. Yep.
There are more people are living alone today than ever before.
My best friend, she bought her first home by herself. She came into an inheritance when her father passed away, and she used it to buy a house.
There you go. Brett?
Well, what I see a lot is parents co-signing mortgage with their kids. Not only gifting the down payment, but co-signing their first purchase. Why? Because as everybody knows, price in Montreal area are pretty high. And when you're first-time home buyer, with the stress test now that we have to apply on purchases, you have a hard time to qualify. That's an issue. On the bright side, now we could extend the amortization period up to 30 years for an insured mortgage, which is when you're purchasing with less than 20%. Back in the days, not long ago, it was a maximum amortization on 25 years, that helps. But no, parents have to be there more than ever for their kids.
Are you seeing other kinds of joint purchases? Like, what if two friends decide to purchase a property together and they'll own their condo instead of just being roommates in an apartment? Is that a thing?
What they're doing is they're purchasing with friends, with their partners, with siblings. We see other brothers and sisters that are purchasing together. Obviously, we've got parents co-signing or we've got guarantors. And the other thing that we're seeing a lot of are, and again, I have trouble saying it, multi-generational purchases where they used to call it the grandma suite, right? You buy a place and there's a grandma suite in the basement. And what that allows you to do is it allows you to share costs. And it also, perhaps in the long term, allow you to alleviate expensive health care because you can take care of. So it's a win-win. So grandma's there to take care of the kids, but sooner or later, you're there to take care of grandma. So we're seeing a lot of that. We're seeing a lot of people getting together to purchase their first properties.
I've seen a lot of really nice intergenerational properties on Centrus lately where it's basically like a duplex almost. Like there's a whole extra living space that is gorgeous. This is no longer just, a basement apartment with a kitchenette and a hot plate.
Well, think about the costs of health care right now, long-term care for an elderly person. And also think of the cost of child care if you can't get one of those magic spots that are subsidized by the government. So if you're about to purchase and everybody gets along, because that's also a huge factor. If you don't get along with your parents, don't have them living downstairs. But if you love your parents like most people do, and your parents love you, you're there to take care of them, and they're there to take care of you and your kids.
Okay, so what is the smartest way to save for a down payment right now if you are hoping to become a first-time home buyer? I think people just think, I'll just put money away in a savings account, but that's probably not the best way to save up the minimum is 5%, right? That's what you need for your down payment?
Yeah, as long as you qualify, Robin, that's true. You need a minimum of 5%. But the best way is to open a FHSA account, which is first own saving account, is a dedicated tax advantage account for first time home buyers. All the contribution are tax deductible and could be a withdraw tax free. The maximum contribution is 8,000 per year, which is you could, let's say you could contribute this year 2025 $8,000, and in 2026, in a few months from now, another 8,000. Any extra money above that, I will highly recommend to put it in a RRSP. Why? Because you could withdraw up to $60,000 per person, and the contribution, it's a great way to save for your down payment. And on the top of that, maybe if you have very wealthy parents or nice parents that have money aside, a gift could be another solution. Like there's really FHSA would be the first one. RSP combined with the FHSA and a gift for the down payment from the parent or family member could be the right solution.
But the secret in all that is to stack them, right?
Yep.
And so when we talked about it a couple of weeks ago, your FHSA will give you a tax refund. You either roll that back into your FHSA, or if you don't have room in there, you roll it into your RSP. You'll get a tax benefit from that. You roll that perhaps in a TFSA. So, all these things are set up to make it easier for you to save up for that down payment. So if they're there, use them, because money sitting in a bank account is losing money on a day-to-day basis. So have the money work in your best interest.
So what are some of the top pitfalls for first-time home buyers? We only have about a minute left. So do you want to maybe quickly run through some of them?
Okay. So if you buy with somebody, make sure you have an agreement with that person. Who is responsible for what, and what percentage of the place is yours and what percentage is theirs. Closing costs, 2 to 4% of the purchase price. Closing costs are the welcome tax, taxe de bienvenue, notary fees, appraisal, inspection, insurance, adjustments for taxes and condo fees. What else is there? Renovations. If you buy the place and the furnace ain't working, well, the first snowfall will be a rude awakening. If you're going to put in a grandma suite, make sure it's a legal grandma suite. Because I've got a friend who bought a duplex and turned it into a triplex, finished the basement, but did not have the permits for the basement. The inspector came in and said, you got to rip it all out. And there was nothing doing. He had to rip it all out because the house wasn't zoned, or it wasn't suitable for what he had built. It was beautiful, but he didn't have the permits to do it. And just make sure that you're not procrastinating and you're going in eyes wide open.
Yeah, be educated, know your options, and plan ahead. The best way to do that is to get in touch with Fred and Martin. They'll help you put a plan in place so that you can become a first-time home buyer. Go to their website, fredandmartin.com. You can book a call with them directly there. Coming up, the answer to our trivia question of the week. Reminder, our question this week: what is a condominium reserve fund study? 514-790-0800 if you think you know it. But first, the time is 12:45. So we're going to check in at the CJD 800 Traffic Center with Jill Fitzgerald. I'm Robyn, that's Fred, that is Martin. Guys, we keep hearing about lenders and notaries being super busy. We had Anna Kamateros, the notary, on a little bit earlier, and she had mentioned off there she's super busy, but she likes being busy, so that's fine. But what is going on right now? Because I think maybe some people are buying a property or their mortgage is coming up for renewal and they're surprised that, wait, why is this taking so long?
Well, it's funny because, off air, just before we came to air with Anna, I asked her, I said, can you take on some more files? Because I'm looking for notaries for our clients. And she goes, you know what? I'm really, really busy. But I'm happy to take on more files. And the more complicated, the happier I am. And it's funny, that reminds me of Fred. The more complicated the file is, the happier Fred is. So, yeah. So you're 100% right, Robyn. Things are backed up right now. with the amount of renewals that are taking place right now, I don't think the lenders were prepared for the volume of mortgages being renewed. So the timelines are completely out of whack. And on top of that, so if the lenders aren't prepared, there are only so many notaries in Quebec, and most of the transactions need to go to the notary, need to be notarized. So again, everybody is swamped, and we keep saying it time and time again. People put things off, but more than ever, you got to start early. You got to start early, not for our sake, but for your sake. Because even if we can get your file qualified very quickly, then we send it to the lender and we're getting delays of 10, 15, 20 business days before they even look at your file. And if there are any complications or any challenges to the file and we have to fulfill some conditions, it's just the lag time is unbelievable because you don't want to get to a point where you go past your maturity date. Because if you go past your maturity date and you still want to go through with the transaction, you need to leave what's called your mortgage open. And having an open mortgage can be a costly endeavor. So why put yourself in that situation? Because now we have this girl, this young lady that just purchased a place, and she called me in a panic. She goes, I never thought it would be so hard to get a notary. She said, I've called 15 notaries, and all of them cannot take my file until past the date of closing. Now, I've got a responsibility because with the seller and I have negotiated a closing date. I need a notary that can do my transaction before the closing date. So I said, thank God, Fred and I have like a short list of notaries that we work closely with. And I called one of them and I asked for a major favor. And she goes, because it's Fred and you, I'm happy to do the file. Call the client back. And she was so relieved. But you don't think about these things, right? You say, the lender will take the time it takes. And then I'll call a notary and my transaction will be done. Not these days. It's a complete game changer with the sheer volume of mortgage business that's going on, that if you got to start early because the lenders are slow, not because they want to be slow, it's just the sheer volume of transactions going through. And then once you get past that hurdle, you've got the next hurdle, notaries. Start calling notaries now or work with us and we'll put you in touch with our notaries.
So what sort of time delay should people expect? Like you mentioned, start early. You said some lenders can take up to 5, 10, 15, 20 business days to even look at your file. So should you be budgeting like a month for the lender and a month to get in with a notary, like 2-3 months? Is that a good time frame to get started?
No, I think the key here is, as Martin says, is to start early, to gather your documents, number one, look at your different options. And the lender side, we used to say 14 days, 15 days. Now it takes a little longer, or sometimes we could have a very quick answer. But by the time from start to finish, I would say a little bit less than 30 days. It should work. Like the key is to start early. And obviously, if you work with a good mortgage broker or you work with us, we could help a lot with that because we have good connection with a few notaries that obviously will take your file.
And general adage, the more last minute you are, the more it's going to cost you, no matter what.
Yep.
So, you buy an airline ticket 3 months out, you get it for $400. You buy it 24 hours before the plane's taking off, it's going to be 3 times the price.
All right, that pretty much does it for us for this week. Before we wrap up, we do need to get to the answer to our trivia question for the week, brought to you by Felix and Norton Cookies. Our question this week: in Quebec, what is a condominium reserve fund study or a condo reserve fund study? The study is a comprehensive report that assesses the long-term maintenance and replacement costs of a divided co-ownership's common property. Then they put together a financial plan to make sure that these future expenses can be covered by their reserve fund. So basically, it's making sure that the reserve fund has enough money to cover all of the expenses that is going to have.
And if you're purchasing a condo, ask to see what the Fonds de Prévoyance is. Because the last thing you want to do is go into a condo building and then all of a sudden be hit with a special assessment because they haven't put enough money aside for general repairs. And this happened to me. There was an ancestral wall around the perimeter of the house that I used to live in. and each of the condos was charged in a special cotisation, $10,000. So if the fond de prévoyance was at a level that could have absorbed repairing the wall, we wouldn't have had to divvy out that kind of money. And there are a lot of condo associations that are not necessarily very well managed. So make sure you get that documentation, you read through it before you make your offer.
So our winner for this week is Maria in Beaconsfield. So make sure you check your messages so we can get your contact info. In the meantime, if you want to get in touch with LJ, who's not here this week, but he's still part of the show, he'll be back in a few weeks. You can visit his website at LJ Realties or call or text his team at 514-500-4040. If you also want to get in touch with Anna Kamateros, the notary that we spoke with earlier in the show, she's a notary at KRB, so you can visit their website at krblaw.ca. Fred, Martin, where do people go to get in touch with you?
So we're easy to find. It's fredmartin.com. And often, people think that they have to call us because they've got a transaction to do. You can call us if you've got questions. I mean, what we like to do is to share our knowledge. And the more questions you ask us, the better our knowledge becomes. Because one thing that we will never do is make up the answer. So if you ask us a question for which we don't have the answer, we'll go and get you the answer. But at the same time, it will educate us. So next time a person asks us a question, we will be better informed. And we like to pride ourselves with the information that we like to share with the listeners and our clients. So fredmartin.com, fredmartin.com.
And fredandmartin.com.
If you missed anything, you can check out the show in its entirety on iHeartRadio, Spotify, Apple, wherever you get your podcasts. For LJ, Fred, and Martin, and Anna, I'm Robyn. Have a great Sunday.